Good morning from the floor to see me. This is Chris Robinson with your Traders Exclusive comment here today. Looking at the grains. Friday we had our USDA report. At the end of the day, it was friendly for old crop, bearish for new crop. That was for both corn and beans. And then, of course, we've been concentrating on the hard-red wheat issues with the dryness and the worst yields in 13 years. That information has really kind of been in the mix for the past 5 to 6 weeks. That's why you had such a good rally, especially in the Kansas City wheat. Now, 3 days after the report, it's kind of been digested, and you actually have had some downward pressure in the wheat. We've had a little bit of a turnaround Tuesday here today. Not really that impressive. Corn and beans higher, but the wheat was about 8 to 9 cents lower. If you're looking at support levels, I think that if they really start to flip on this wheat, we may have a little bit of a correction. Of course, how big of a correction, that's always the question. But I would watch the technical support levels. And, if you look at any chart, you can see, look at the weekly. And if we start taking out, especially like $7 in Chicago, maybe $6.85 in Chicago, that could be a problem for any lingering wheat bulls. Now, is there a possibility we could catch a bid? Absolutely. But a bull market needs to be fed. And right now, we've had a lack of bullish information to keep that going. Secondly, what are we looking at as far as the spreads? Well, a lot of traders are looking at July Dees corn spread, buying that bull spread. That's been a decent spread in the past 6 weeks. A lot of traders are possibly looking for that old crop tightness to continue. And now we've had good planting progress for new crop corn. Yesterday we got planting progress, 59%. A lot of people actually think it's, in the trade anyhow, think it's closer to maybe 65 to 66%. So what does that mean? Well, there's no planting delays to speak of for a large chunk of the country right now. So we're having good planting progress. Without planting delays, it sort of pulls the bullish story away from new crop. So traders are trying to take advantage of that by buying old crop, selling new crop. There is a 1 cent gap in December corn from yesterday's high to the previous low. There's about a penny gap between 496 and 497. That becomes more and more significant as time goes on, but take a look at that July Dees spread. And then finally, I've talked before about the July-November bean spread. We continue to have tightness in old crop beans, new crop beans. The corn's going to get planted first, but once the new crop gets planted, traders are again looking at that spread. It's traded out to a high of around 270 to 273. 5 days ago, it came back down to 225. Those are key areas, and it doesn't matter if you're a bull or a bear. If you're speculating in that spread, you've got to look at the chart points. And then finally, what's going on with the market in general? The investment community continues to want to own commodities as a hedge against inflation, as well as if there's a worry that there's a correction in the stock market. Now we're at these lofty highs in the stock market. You've got the S&P closing in on the 1900 level. You've got a lot of traders looking for 17,000 in the Dow. We're around 16.7, so you're only 300 points away from that nice round number. At some point, if we got a correction in the stock market, these funds would want to have their long bet on in the beans as a hedge against that. Now it's all going to play out in the next, really through the month of July. It's going to be up to Mother Nature what happens with these commodities. But those are the spreads I'd look at. I look at the July Dees corn spread, the July Nov soybean spread, and as far as the wheat goes, we may have this bull market start to falter if we don't continue to get some bullish support. So that's about it from the For the CME. This is Chris Robinson. Have a good day.